It's a great story. Yeah, there's a lot of great stories that come out of the inner city, and I'm just one of the many. But I want to tell people every time I go into a meeting, I get to tell that story.
There it is, ladies and gentlemen, inside the vault with Ash Cash. When we met him, man, he was like, what is this thing, a microphone? And now when you look at him, man, he's producing, directing, writing. He's doing it all every single day. A financial educator, one of the nation's top, and you can see him all over the internet giving up game for free. Ladies and gentlemen, the one and only Ash Cash is back.
Hey.
Peace and blessings, family. Peace and blessings.
Peace and blessings, man. How you been, bro? I love watching you. I love the information you're giving people on a daily basis. How you been?
I've been great, man. Good news Thursday. The good news is that we woke up this morning, and so I've been great. First and foremost, I agree with you. I thank you. Salute, man. Like literally, I did other interviews, but Sway in the Morning kind of took me over the top. When people started seeing that I was connected to the big bro, to the legend, they was like, wait, hold on, let me listen to what this guy got to say, and it's just been a blessing to be able to really help people change their mindset, really help people from a tangible way, take whatever situation is given and make the best out of it, right? And so Tracy said earlier, how if it wasn't for 2020 and the pandemic, then Good News Thursday wouldn't have happened. And that's what's happening in this financial world as well, is that if it wasn't for the pandemic, if it wasn't for a lot of, the negative that we could potentially see out of it, a lot of the positive that is coming out of, the pandemic and will come out of this financial world, it wouldn't happen. And so for me, as one of the frontline workers, in the financial empowerment movement, it's a great time to be alive.
Hey,
Word
man,
up.
Ash Cash. I love that energy right there. I am Ash Cash, man. Follow him. All right, man. We're going to ask. The lines are so lit up, I don't even know if I want to get to my question. But let me start. I was having a conversation with someone recently about savings and putting your money into different savings accounts at a bank and just letting it, just regular savings account, and then letting it sit, and how money just sitting like that depending on the rate of inflation, at the end of the day, in the long run, you could actually be losing money. Can you speak to that ideology, that theory right there, and where we are in the rate of inflation in this country compared to interest rates you could collect putting money in the savings accounts?
Yeah, absolutely. And, this might be contrary to what every, old person or anybody with wisdom might have told us. But saving money in the bank is the worst thing you could possibly do for your money, right? And the reason for that is exactly what you said. Is when you think about inflation rates, you're not even getting a percent, right? In the bank, and if you do get a percent, inflation rate is around 2.5%, 3%, or and it continues to increase, right? And so if you think about that just from a basic mathematical perspective, if you put your money in the bank and you allow it to earn you, let's say you're lucky and you're getting 1%, you're losing 2% of that value, of that ability to purchase, every single year, right? And the reason why putting your money in a savings account is one of the worst things that you can do is because money is a tool. And we're supposed to use money, we're supposed to circulate money. We're supposed to use money in order to live the lifestyle and get the things that we want. I know, Wu-Tang told us back in the day, they said cash rule everything around me, right? But it's not really just cash, it's cash flow. And so what I believe is that everybody should have money in the bank, but the money that you have in the bank should be for your financial freedom. We used to call it an emergency fund. Words have power, so we're not calling any emergencies into our lives. So I'm not going to tell you save money for an emergency, but I am going to tell you that you should have 6 to 8 months of expenses in an account so that if anything happens, like when we looked at the pandemic, last year and people losing jobs and things of that nature, you don't want to shake up your lifestyle by not having money in a financial freedom fund, at least 6 to 8 months of expenses. But Beyond that, right, if you're just sort of accumulating money just for the sake of accumulating money, and then we're focusing on, how money works the wrong way. The goal should be you should invest your money, and you should be investing your money in income-producing assets that allow you to gain some cash flow, because cash flow is what rules everything around us, right? Which means that when people talk about multiple streams of income all the time, which means that if you have money sitting in a savings account and the money is not working for you, then it's losing, right? But let's say you have money and you have money and you now allow that money to work for you, and from that money that's working for you, you invest in an income-producing asset. Now that income-producing asset is giving you more cash flow. Now you don't have to worry about losing the job. You don't have to worry about, a shift in the economy, because now you're building these multiple streams of income, and that's what the true financial freedom is. That's what allowing yourself to really use money the right way is by investing it, is by circulating it, and not allowing it to be a dead asset, right?
Yeah.
You know how in New York we say dead ass. You don't want money to be a dead asset, right? You want it to be working for you. So just leaving it in the savings account is not the best idea.
And I think that's excellent. Especially when you do the math, a lot of people aren't professional investors, though, Ash, Cash,
Right.
and don't know really where to put it into a money-making asset, where to actually gamble, if you will, or the place it in an area where there's a lower amount of risk.
Right.
So what would you suggest to them? Where do they look? What kind of simple investment outlets would you suggest people look into if they're not professional investors? They're not really big on the finances like that, but want to learn.
Yeah, for sure. I would say number one. So there's two main or three main places where people could invest in money in order to allow it to circulate, right? So number one is in the market, right? So stock, bonds, mutual funds. I would venture to say cryptocurrency. Then you have real estate, and then you have a business, right? And so as it relates to the market, one of the great things about the market is that the market is there aren't no guaranteed returns, but if you are looking at the history of the way the stock market performs, you could really you'll know that in the history of the market is always going up. And if someone is just starting out and someone's not a sophisticated investor and, is not looking at the markets every day, one of the things that they can do is invest their money in an index fund or an ETF, which is an electronic trade fund, right? And what an index fund is, the index fund is connected to a specific index. So whether it's the S&P 500, it's the Dow Jones, it's specific to industry, or it's specific to the top companies in America. And so let's say if we take the S&P 500 or the Dow Jones, regardless of the shifts that have happened within the markets, the S&P 500 and the Dow Jones historically have always went up, right? And so when someone's thinking about investing, look at investing as a long-term play and not necessarily how I'm going to get rich quick, right? Because long-term it's always going to go up. And so you literally don't even have to be sophisticated and know what the markets are doing. Just if you look at the history of index funds or potentially ETFs, you'll see, and you see the research, and you look at the last 10 years, 20 years, 30 years, that it always goes up. What I would suggest people do is do what's called dollar cost averaging. What that means is don't just save money, like a lump sum of money, and once you get in a lump sum of money, now figure out where you're going to invest the money. I would say budget your money, right? While you're saving for your financial freedom fund, budget a certain amount of money. Say $100 a paycheck. Say $50, $10, $1, whatever you could afford. Say this amount of money I'm going to invest periodically into the market. And what dollar cost averaging does is that when the market is up, then you're going to get less shares at whatever price you've had it. at whatever price that you've decided to budget. When the stock market is down, it's actually the market. Stocks and mutual funds, bonds, they're all on sale, so you'll actually get more. And when you do that, you're averaging it out. And so you're mitigating your risk, so you're not necessarily taking a big risk, but that way you are periodically investing inside of the markets in a way that's sustainable to you, where it's like, all right, $10, $20, $100, this is what I could afford. And then over time, what you're going to notice is that there's going to be an increase in your assets because of how you decided to invest. The other thing is real estate, right? A lot of us were told, myself included, where become a homeowner, right, and buy a house. And most people buy homes to live in the first time around, right? If I could do it all over again, I would do what a lot of experts, fast out to my brother, Julian Gordon, who's part of the multifamily movement, who's saying do not buy a single family home first. When you buy a place to live, do what's called house hacking, right? Buy a home, a multifamily home that the bank is going to recognize as income because it has these multifamilies in it. And instead of paying a mortgage, the tenants that are already in the property are now going to be going to help you pay that mortgage, and then live in the house for 1 year. And then after that year, if you started off with a 4-family or 3-family, then the next year do a 3-family, then the next year do a 2-family. And if you do that, like let's say you started with a 3-family home as a first-time home buyer, and there's programs that give you 0% down. There's programs that allow you to put 3% down. There's programs, FHA loans that have a low credit score. So if someone's starting from scratch says, I don't know what to do, I have a low credit score, you can use an FHA loan, do like a 3-family home, then do a 2-family home, and then by the time you get to the single-family home, the 3-family and the 2-family is already paying for the 1-family, and so now you have an asset that you continue to build your wealth, and now the money that you're actually working hard for, you don't have to use that to live because your assets, your houses are what's paying for your living expenses.
Ash Cash. Now, listen, you are officially in a lecture right now, citizens, and I want him to give out your social, because I know we're not going to be able to get to everyone today, and it's packed. The lines are packed. So if you can't get on air today, he's going to tell you how you can reach him every day, and definitely follow him because he speaks every morning. Go for it, bro.
So definitely follow me on all social media platforms at I am Ash Cash. Very active on IG. Like you said, I'm every single morning dropping free game. I do respond to all my DMs and messages. So at I am Ash Cash.
ASHCASH. Let me go to a caller real quick, and then and definitely want to invite Heather and Tracy to jump in. Brittany from Queens, Grand Risings, Brittany.
Hey, Britt.
Hey, Grand Rising. My name is Brittany. So I want to know, I'm trying to open up a business.
Britt. Oh.
Okay. Well, first thing you should do, Brittany, my advice is get a better phone service.
You know what?
If you're going to do
If
it.
you'd like to make a call, please hang up and try again.
Okay. Let me see. Let's go to Bob in Canada. Bob, Grand Risings.
Bob the Builder. Hey, Bob.
What it do? Bob?
What's going on with the phone?
Maybe it's my lines. Hold up. Desiree, are you there? Desiree.
I'm here.
There you go. Okay, that's from Cali. She's from Cali. I knew she'd be on point. Des, you got a question for Ash Cash?
I do. So I'm just starting to do I'm getting my feet wet in cryptocurrency. What is I don't know, I'm in Dogecoin. I got in at about 6 cents.
Ooh.
What is the future in this? Is there really something, or is it just a joke?
I knew that was going to be the first question.
Yeah, and so here's the thing about crypto, right? So if you got in at 6 cents, you're doing well right now. And I know there's what started off as a joke is really kind of taking shape. The one thing I'll tell you about crypto is that crypto is very volatile, right? And so it's really a gamble. What I said earlier, as it relates to investing, the only reason I could talk so confidently about the markets and things of that nature is because of the history, right? It's been around for many years, and so we could look at the history and we could almost predict what's going to happen. But with cryptocurrency, it's really hard to predict what's going to happen because it's new, it's volatile. Doge is going up really, really fast. The fact that Elon Musk is co-signing it is going to allow it to go, continue to go up fast. No one knows really the future. Is it ever going to bottom out? Is it going to be a situation where people are like, all right, enough is enough, let's start getting out of it. What I will say, though, is that when you think about, like Bitcoin, for instance, me personally, Bitcoin is something that I've invested in, only because I'm watching and I'm reading the writings on the wall, right? When I'm watching, major institutions really put their money into Bitcoin, and now, banks are starting to, the murmurings of banks starting to talk about being able to exchange Bitcoin within banking institutions is telling me that, at the 57,000 that it is right now, that it's going to go further. What I would say is, if you're in Doge right now, just watch it. Just kind of, make sure you're paying attention to what's happening. Who's investing in it, right? Are there large institutional investors who are investing? Who's pulling out of it? Just kind of watch it and just follow the signs, because if you follow the signs, you'll know what direction it's going in, and then you'll be able to benefit. But I do know, it's very volatile, like I said, but really just pay attention to which direction it's going.
Hey, Daz, good luck with it. Thank you for your call, okay? We appreciate you. You're a citizen.
Guys. Good morning.
Sway in the morning.
Yep. Dogecoin is up to like 60, what is it up to, 66 cents?
67.
67
Yeah, I think
cents?
67 last time I checked. So that's a come up for a lot of
I
people.
saw 69 yesterday.
Oh, damn. Okay. Hello. Hey, Speed, you got a question?
Yep, and it's real simple, Ash. Thank you for joining us. I actually have to go back to the start of this conversation when you were talking about savings. I'm the primary caregiver for my grandparents, and it's kind of crazy because it's hard to talk to them about things like this. Their home is already paid for. They have minimal bills, if you will. They're not traveling and everything as much. But when you talk about leaving their money or them leaving their money in a savings account, what is the safest thing that I can tell people like that, the elderly? Do I say, here, take this $5,000 or this $10,000 and put it in the CD? What do you say to people that are on the elderly side of this in terms of leaving their money just in the bank? Because that's kind of the school that they're from, Ash.
Yeah, no, that's a great question. I think that there are a lot of, safe ways, right? And so even oddly enough, though, even savings bonds are actually starting to increase, right? So those are starting to become a hot commodity, and so potentially savings bonds could be something that works, right? So when we look at the rates, last year the rate for savings bonds was about 1.68%. And so now a Series I savings bond is earning about 3.54%, which is beating inflation a little bit, right? Mm-hmm. And so, I would tell, potentially someone who's elderly who wants to kind of, put their money in something safe, something they know, something they're secure in. Savings bonds are potentially something that you can do. There are other, there's other things within the markets, right? When you think about treasuries and you think about money market accounts that work similar to a CD or have security, not FDIC insured like a CD, a certificate of deposit would be in a bank, but let's say if you do, treasury or, anything that's secured by the government, it's the same as, it's not the same, but it's similar to FDIC. And so I would just say to really just explore some of the other secure
Yeah.
ways to put your money in that they're used to, or they're familiar
It's
with.
simpler. Yeah,
and
it's
just
a
kind of
little more
educating them a
simpler.
little bit.
Yeah.
Yeah,
Okay.
for
No,
sure.
thank you for that. Dope.
You talk. I apologize, Tracy. You brought up the FDIC, right? And when it comes to cryptocurrency, I'm just curious. Like, do you see the federal government beginning to implement regulations?
Yeah. I think the federal. It's really difficult for them to do it, right? And the first way they tried is through taxes, right? And trying to, tax you on your gains, and no matter if you hold the coin or not. And so that's one way. But the truth of the matter is that the reason why cryptocurrency is something that the government, because the government agencies haven't jumped on immediately, is because of the inability to trace it, right? The inability to you can stay anonymous. Like, people don't even really need to know. There's no sort of like tracking mechanism. When you think about the banking world and how you have the customer protection program, where you have to know your customer and get IDs and things of that nature. It's really hard to do that with cryptocurrency. But I don't think that they're going to stop trying to figure it out. But I don't. It's going to be very difficult for them to try to regulate something that no one really owns. And that you don't really need that middle person or someone to control it. And so I really don't see that.
Okay, Ash Cash is with us. Tracy G.
Yeah, Ash, to bring in a lifestyle element, what's your opinion on people entering marriage, but they're not equally yoked when it comes to financial literacy? Does that need to happen? Do you feel like that's a requirement, where if one person has a strength, they should build up the other person's muscle and then they get married? Or do you think that you can have a functional marriage with one person, having the financial prowess and the other person being at like a freshman level?
Oh, Tracy, you gave me the spicy question.
Hello.
So here's my thought on that. I think that the level of financial literacy is a great barometer, but I think that most importantly, when two people get together, it should be in the effort to move on one accord, right? And so as long as the financial life and the goals are aligned, then I think that if one person is more financially astute than the other, that's fine, because the one thing that makes a union a strong union is that we could carry each other, right? Where I'm strong, I'll carry that on that level, and then where you're strong, you'll carry it on that level, and then together, we become a power couple. What winds up happening in unions is that a lot of times, you have somebody who's not whole, right? Somebody who's still trying to figure themselves out. They're at 50%. They find somebody else who also is trying to figure themselves out, and they come together and try to be, 100%, and now they're dependent on each other, right? What should happen is that you need to be a whole you, right? A whole person, 100% or close to it. Your partner should be a whole person or close to it. And when you come together, you are now interdependent, not dependent. Like, I don't need you, you don't need me. But at the end of the day, when we come together, we're better together because of it. So I just think as long as you're connecting with someone who's on the same wavelength, meaning that you are energetically aligned, your goals are aligned. This is where I want to go. This is where we're working towards it every single day. And then, whoever's ahead from a financial literacy perspective could support the other person. But I do think that, having that conversation about goals, about where do people, where we are and where do we want to go, I think that's important, because if there isn't an alignment there, that's a recipe for disaster.
Yeah, I think that's so empowering what you said, Ash, with the fact that someone can be a whole person even if they're just now learning about finances, because for so many of us, I think that has been a factor for men for quite a while. You'll see a lot of dudes who they'll have the right woman in front of them, but they have an insecurity because they don't know as much about finances like they believe that they should, right? So then they stall on something for a long time. And then now, as we see women climbing up the ranks so much, I've noticed an insecurity where it's like, damn, is a dude gonna want to be with me? Because I'm not on this boss babe level, although I have a high sense of awareness and I bring so many other things to the table. It's really interesting how this finance conversation can bring so much self-doubt, and it feels like that has to be at an A+ game in order for someone to feel worthy of love.
Yeah, and that's a great point. And I think that, one of the important things is to understand that, relationships are about balance, right? And because if you have two bosses in the same relationship, you're going to bump heads, right? And so there has to be a balance, and going in there, and this is why I said it's important that you have to be your whole self first and foremost, and then connect with somebody who's their whole self, right? Because that insecurity, sometimes that insecurity comes from just knowing who you are, and understanding, who you are, what you bring to the table. Because if you know who you are, then you're not intimidated by who someone else is, right? And
yes.
So if you know that you're on the grind and you're doing your thing and your financial situation is going to change, and you connect with a boss, a boss chick, whoever, you're going to get to a space where you're like, all right, great, this union's going to be dope because I know who I am and I'm going to add value to this relationship. So knowledge of self is really, really important.
Big facts.
I'm going to try to take maybe a couple more, but we got to do rule of bridge answers, Ash Cash. So and we'll send them to your IG.
Way, but I got
okay. No, man, you've been jogging. I know you've been running running the park now. You got your lungs up. Your lung capacity has expanded. I get it. I'm getting a text. Shout out to my friend Jen. She's a dentist and it's like, yo, this guy is dropping gems. So you're getting a lot of good response right now. Jim in Queens, you want to add to the conversation? It's Jim, y'all. Jim.
Hey, Jim. Speaking of gems.
Guys? How's it going?
What up, Jim?
I'm listening to you guys talk a little bit about Doge and a couple other things. I'm a bit of a crypto guy.
Okay.
To say Bitcoin's anonymous is a little bit incorrect. It's a distributed ledger. So Bitcoin as a whole is every transaction. So you can actually track and trace every transaction that happens on the blockchain. And currently the FBI is using the Bitcoin ledger to track, bad activity. And this week they probed Kraken, the crypto exchange, to give over customer information because they've found some suspicious activity that they need to look into.
Like what? Give me an example. Give me an example of suspicious activity.
Well, it could be, like the bad things you hear, whatever it is, guns, drugs. Back in the day, you can buy, gallons of Molly on Silk Road with Bitcoin.
Yeah, that's
so
right.
They're tracking down things like that now. So things that happened, 10 years ago with Bitcoin, they're scouring the ledger and finding things, and they're enforcing, things. And then another point about Doge is, back in 2017, the big thing was copying, because it's, these are open source computer codes. That's what blockchain is. So you can copy, Bitcoin and call it, whatever you want. Dogecoin is a copy of Litecoin, which is also a copy of Bitcoin. And there's no fixed supply. So every hour, 10,000 more Dogecoin is put out into the market. So it's super inflationary to start.
And I appreciate that. Which also, I know a lot of people have been comparing it to the U.S. dollar because the way the U.S. dollar could be printed, and that's why it's definitely volatile, and you want to be careful if you're jumping into it.
Hey, Jim.
That's the protest, is that the government's printing $2 trillion every couple months, and Dogecoin gets it has a huge inflationary percentage compared to the dollar, same thing. But the problem is that 28% of the total Doge supply, billions of coins worth over $20 billion US, is owned by one wallet, and you can track that because it's a distributed ledger, so you can see every wallet. 12 other wallets own 67% of the supply of Doge, so 95% of the Doge is owned by 13 people. So
okay.
it's the people's currency, but it's owned by 13 people. And when they decide to dump, it's gonna go. The party's gonna be over.
Okay.
So you're just playing, with hoping that you're gonna get out before those 13 people decide to get out.
Ooh, Jim, thank you, Jim.
Go ahead, Jim. The last sale from the whale, the main whale, was in April. Sold about $100 million, and that coincides with that dip that Doge had back then.
Mm-hmm. Jim
So
dropping
if he
gems,
only sold $100 million back in April and dumped the price, what if he wants to sell $2 billion?
Then what happens? So that's why we say volatile. Jim, thank you for dropping gems. I've been trying to say Jim dropping gems for about 4 minutes now. But it's just so much to learn, right? Jim, thank you. You're a citizen, Jim.
Let's Sway in the morning.
Jim. I'm going to give you a simple question. Jay from Indianapolis, you got a question for Ash Cash?
Yeah, no doubt. Hey, first I got to say it to everybody. First, thank you, OQ, for taking the call. Thank you, Tracy G. Thank you, Sway. Thank you, Heather B. And Ash Cash, you have been dropping gems. Long-time listener. Definitely want to get my citizenship out of this, too. But a lot of my questions have been asked. I'm a gambler, so I look at it like I've got $3,000. I want to go ahead and gamble. Instead of going to the poker table, Sway, you know about the poker table.
Come on, baby.
Instead of going there, I'm going to go – I want to, invest it. So I got a friend who actually was at the poker table last night, told me last year that he invested $2,700 in At Home, and it now I think he made $67,000 off of it in 1 year. I know all cases aren't like that, so I'm just wondering, how can I get in play in it? Like, what apps are out there? You talked a lot about cryptocurrency. Obviously, was calling it Dogecoin. I don't even really know about it, but I have friends that were playing with it, Bitcoin years ago. So just wondering, like, what ways is it penny stocks? They tell me maybe to start playing in penny stocks. What apps are out there? And, I guess I just listen to the rest of the knowledge that you're dropping. But thank you very much.
Hey, Jay, hold up, Jay.
For sure.
Hold up, Ash. Jay, you officially a citizen.
A Sway in the morning.
Oh, there you go, brother. Okay, go ahead, Ash. That's important.
For sure. Yeah, so I would say, the first, if you're willing to gamble, that's cool, right? Because, again, just make sure it ain't the money that you have to pay the bills with. So I would look at, Coinbase obviously is what a lot of people, not obviously, but a lot of people are using Coinbase, to like purchase, the cryptocurrency. When you think about, trading apps, there's just so many different trading apps. At one point, I would say Robinhood, but they've been having problems, especially when you think about like GameStop. So you have your TD Ameritrades where you could buy some stock. You have I've seen like Webull, WEBULL is a trading app that you could use for trading. Fidelity has something. E-Trade. You have Merrill Lynch. There's different different trading apps out there. The good news, since it's good news Tuesday, the good news is that a lot of these trading apps do not offer. A lot of them give you free trades or low cost trades, and so if you just really like investigate the different ones that you're interested in, you can see which platforms are better for you. But those were a few options.
Hey Jay, good luck with it, man. I believe in you, bro. I want to hear from you in about a year to see how much you made, family. Okay, then we go to the poker table.
Doubt.
You in Indianapolis? They got an MGM somewhere out there, right?
Nah, I'm coming to where you are, man, on the Harley that I'm about to do one.
Oh, okay. Well, our players at Lucky Chances in Northern California. hey, Jay, you don't want to just walk in that place unless you're ready. You'll be leaving without that Harley, huh?
I swim with the sharks, man. I come on my shark and swim with the sharks. I ain't scared.
Oh, my man, Jay, I like that.
Well,
that's why you a citizen, brother. Hey, man,
That's why you're the morning.
You're a citizen, brother. I'll give it that. Hey, man, Ash Cash, I want to thank you for being on today. Round of applause for this man for dropping all
Yes.
these dudes. Let's go back to doing it more often. Let's do it monthly, okay? You with that?
Let's do it. Let's do it. I
I'll talk.
appreciate y'all. Thank y'all so much for everything.
Hey, let me say
Appreciate
this. Let me say this too, because I've had the opportunity to lose in finances a lot and win some, and along the way learn about it. My partner King Tech and I, we have a friend named Chris too who studies the markets and all of those different things over the years. You know, and it's always I found when I start collaborating with people who I trusted and had knowledge on finances in other areas, and we had conversations together and talked and meshed things out, it usually garnered us a better result, you know, of the investments that we made. I saw you talking with your accountant, I believe, on your platform, or an accountant. And I thought that was really good to see, because sometimes financial folks don't feel like they need an accountant. But you have an accountant, right?
Oh, absolutely. Who deserves the Medal of Freedom is my accountant. Yeah, I think that a good accountant is gonna make you money. And so, you know, fast shout to Money Making Mitch, Michelle, Val Brun. He, you know, has a lot of good tax strategies. And the thing about an accountant is that taxes, the tax laws change every year, right? So you think it's a new administration. So think, right, when Donald Trump was in office, he had a certain set of tax laws. But guess what? Now that we have, you know, Joe Biden, there's a new set of tax laws. And so an accountant is going to understand that, and they're going to, you know, they're going to learn those loopholes, how to hula hoop through those loopholes. So you definitely should have a great money team that's going to help you, you know, increase your wealth for sure.
There it is, man. Ash Cash, follow him, citizens. You can keep asking him questions. He got so many answers for you. I am Ash Cash, ASHCASH. Thank you, brother, for joining us this morning. I appreciate you, bro.
Appreciate you. Love, family.
Love every time,
Yeah,
man. We'll talk to. Hey, Ash Cash. Remember we talked about starting our own investment group? I put aside that money, man. I'm still ready. We can talk about that later.
I'm on it for sure. I'm hitting you offline. Let's do it.
Oh, okay, let's do it, man. Okay, there you go. Ash Cash, citizens. Give him a big round of applause.